and it's worked. And this is an example trade that I think was one of my first trades that I did, and it worked out so well that Suncorp is really good for doing strangles because it consolidates quite a lot and then moves big time in either way. So this is what I did. The price was trading at 5.26. I did 2 contracts. I did a 5.14 put and a 5.39 call, and it cost me 65 cents to enter. So it cost me 13.26 altogether. So I mean, really, the entry prices are so cheap to be able to enter these strangles compared to some other option strategies around, that you don't need a lot of capital to enter these strategies, which is great for first time people that have only got a small account size and they just want to see how it goes. You know, you could trade this with $5,000 or less and put two trades on and build it up slowly from there, and you know, making some decent money out of it. So then you can see I put the ATR in, which is 32, and it came out with a price of 79. So 65 is not over 79, so I thought this is a good trade. I've got my upper break even and my lower break even, and I'll show you on the chart where I've drawn my technical analysis and how I decided that I'd want to do this trade. So there's the break even there, and the upper break even and the lower break even, and as you can see, it's well and truly within that range. It's actually right in the middle of it. And also, the Bollinger Bands are really close together, meaning low volatility. There was a technical pattern called a falling wedge, which I saw, which is a bullish pattern, and I got a projected upside of around here, so I knew it was going to rise to some degree. The ATR was low. Now the stochastics were trending up, but you can see from back here there's quite bullish divergence. So this has been going down, but this has been coming up, and the same with the RSI too, bullish divergence on the RSI. So as far as I'm concerned, this was a great. All my boxes were ticked for this trade. So now you can see what happened after I entered. It went bang, broke through this downtrending line, and up, and I got out around when it hit the break even. I got out and placed another strangle at that break even point. And I mean, I could also see too that the stochastics were in the oversold zone, and so was the RSI. So I knew something was either going to turn around, something was going to happen, so I wanted to take my money off the table and enter a new strangle at this height here. So if it did keep going, I'd still make more money, but at the same time, I'd be protected on the downside. And as you can see, look at the bands now are quite far apart, and so volatility here was really high. And so I was able to sell my calls for the cost of more than what it cost me to get in to the first trade. So that was good. So I'll go through here the steps taken to roll out. I sold my 2 April $5.39 calls. I then bought 2 April $5.88 calls and bought 2 April $5.63 puts, keeping in mind that I still have the $5.14 puts in place. Alright, so now I've effectively got 2 lots of calls and 4 lots of puts. So I'm doubly downside protected. So I was able to do this for a debit of just 1 cent, which is fantastic. So now I have double unlimited downside potential, which with those 4 puts, plus unlimited upside potential again if it decides to freak out and go back up again, or stay back up again. I'll just let you know what happened. The stock kept going higher, and I was able to close out my calls, these $5.88 calls again, for a 100% profit. Plus, when the stock pulled back, which it did pretty much straight after that, I sold my 2 puts for 80%, and all up this trade netted me 180%, which was freaking my freak. I can tell you, I was loving it. This is exactly what happens, how the trade looks. So here was where I got back into the strangle, and it kept going up and up and up and up and up. I got out here, got out up here, and I sold those calls, and then slowly watched it come all the way down and got out of my puts here. And I got out of my puts here because A, it was sitting on the lower Bollinger Band, and they were starting to come together, which means volatility was starting to come back in and come back lower, so I wanted to sell those puts while the volatility was still, relatively high. And also, the stochastics were showing that it was nearly coming back down here, so it could have easily turned around and gone back up again. So I was wanting to get out and just take my money, and just loved the whole experience of doing it. So, thank you. Thanks for your time today, everyone. I really appreciate it, and I hope you really got a lot out of this trading tutorial. Of course, if you need more information, just go to my blog at marketmum.universalwealthcreation.com, and if you'd like to contact me with any questions that you have about this tutorial, you can see my contact. Go to this website that's coming up on the screen now, and otherwise, you can go to the blog and leave me a comment underneath, because this trading tutorial will be on my blog. So leave a comment underneath the post, and let me know what you think, and if you've got any questions. From now on, I'll be posting all my trades, my strangles, on my blog, so you can get more information that way and see how I adjust to different market conditions and different market, whatever else happens in the market. So thanks again for your time. I really appreciate it. And as always, happy trading. And remember, mum's the word. Bye for now.